Cool. So yeah, we'll just get started. Good to see you. You want to tell us a little bit about yourself first?
Yeah, sure, absolutely. Thanks for having me on, Michael. So yeah, my name's Hersh Rai. I am 23 years old. Currently active duty Navy. Went to the Naval Academy, graduated and commissioned, and am currently in Pensacola, Florida, attending some training, and will be going out to Hawaii to pursue my first operational duty station. Right out of the academy, I had the opportunity to go to Purdue University and get my master's in computer science. And that was the time where I started to fully get into real estate investing, specifically focusing on mobile home parks and commercial multifamily acquisitions. And more than happy to go into the story of acquisitions I've done now and what we're working on in the future.
No, definitely. So like what we focus on, just my company is multifamily. There's room for variance, but we're super focused on multifamily, and so even more so, military people investing in multifamily. So you're like target customer. You want to tell us a little bit about like how you like discovered multifamily at such a young age, and even more so, like how you got started actually investing in multifamily at such a young age?
Yeah, absolutely. So, like I said, when I got to Purdue in the fall of 2019, I was coming off a summer of a lot of enjoyment with a lot of different friends and enjoying my time in Annapolis. And when I got to Purdue, I decided to have a little bit of fun, but I realized I had way too much time on my hands, more than I knew what to do with. Coming from a regimented military environment where they dictate your schedule into a environment where it's more self-guided, and you have research and classes, but set aside, you have more so time to discover other hobbies and interests. So I decided to go towards my personal affinity in finance and tried to determine what the best step was to gain that financial independence that so many people seek. And I read Rich Dad Poor Dad and started to dive into alternative forms of investing. I mean, I'm talking about tax liens, promissory notes. I deep dove into quite a few, and finally ventured into real estate and decided this is what I wanted to do, aside from my traditional portfolio with stocks primarily and mutual funds. So from there, I decided to read multiple books about single family rentals, short term rentals, referring to bigger pockets, listening to a lot of different podcasts from accomplished authors that I read about, as well as operators, and realized that the Midwest was one of the best markets to hop into. And I was like, I'm living in the Midwest. I'm an hour outside of Indianapolis. I'm 2.5 hours away from Cincinnati. I might as well do something while I'm out here, while I have the opportunity to drive down, look at properties, meet with operators, learn what they're doing, learn the business. And so I started to go to meetups, locally pre-COVID. So this is the fall, about 6 months before everything hit. And I went to tons of meetups, networked with a ton of people, was able to meet some really great people and add value to them. The first person I was able to add value to was a syndicator who had about 300 units, but he didn't have a website. I said, hey man, your family first at gmail.com. What's the deal? Do you have a website or anything? And he was like, I mean, I have the domain, I own it. I just don't have the time to make it. I said, hey man, look, I have a computer science background. I'll help you out. I'll make it for you. I'll streamline the design and, in turn, teach me how to underwrite a property. So we did just that. And that's how I got my first steps into multifamily, learning about, operating expenses, cap rates, all these glorious things that everyone talks about nowadays. Yeah, absolutely. Party in the house, right? So that's how I got my start, really diving in. And then I met my business partner, Nick, who happened to be my roommate at Purdue at the time, knowing that, you can get a lot farther moving along together than you can by yourself. So I, invited him to learn a little bit, and then we both dove in, and, Nick and I really balance each other out from a, go-getter standpoint, as well as a, all right, let's focus on what we're working on now standpoint. And from there, we met some great partners in the markets that we're working on and we're focused in. And we just started to build our portfolio, and we're working on some other acquisitions and other opportunities right now. So that's how we got started.
Dope. You mentioned you're in Midwest. I saw that your investments are in the Midwest. Out of those investments that you have, I guess I want to know. You don't have to give numbers. I'm not really big on like specifics. It's it's kind of a private thing, but what is your best investment, real estate investment, and like what is your real estate investment that you're most proud of?
So that's a good question. So the one that I'm most proud of is my first one. So that's going to be the 16 unit that we bought in Avon, Indiana. Avon's a Class A market, but it's a C class asset. So this is, the epitome of what everyone talks about on all their podcasts. Go find the really rough looking property. But this property wasn't rough by any means. I mean, we knew the previous owners through meetups that we had attended in Indianapolis. It ended up working really well. That was a joint venture, really easy to, be able to add value, increase rents by, the pure value add play. Everyone, all your listeners probably know what that is by now. So we're really proud of that one without getting into the numbers. And our best one as of now is a portfolio that we're on the verge of closing here in about a week. It's a 98 pad mobile home park portfolio in Pensacola, Florida. So, this is right off a road where there's a huge Navy Federal subdivision or headquarters that is bringing a lot of growth and driving a lot of development within the area. And where these parks are located, there's just a ton of demand for affordable housing, especially after the last hurricane in September 2020, Hurricane Sally. A lot of people were left, without homes due to, issues with, flooding, roof issues. So a lot of people are looking for temporary housing or even for, a less affordable, or sorry, excuse me, more affordable area to go, which they can claim and call their own. And that's why we really like mobile home parks. So those are some of the ones we are currently venturing into, and we're really proud of at this point.
No, I saw that on your LinkedIn, the mobile home park. I'm like, what? And then so I had to like do some Googling. I'm like, okay, that could make sense, depending on how you work it. Um, Something that I thought was super interesting was that you're super young, and then I don't know if you've met Julia in person, but we're on LinkedIn. We're connected with Julia Ju, another Naval Academy grad. So, do you know who Neil Bawa is?
Yeah, absolutely. He's the technology driven real estate guru. Absolutely.
Sure, yeah, I feel like you guys would like line up. So, I was listening to one of his videos, and I think it was like how to underwrite. No, it wasn't a property. It's how to learn like the area, how to learn the area that you're investing in an hour, right? And it's like a 58-minute video, basically just like a camera in a conference room, and he's like doing an in-person event. And he was basically like go on city data, and he'd like look up all this data. And one of the things you want to look at, you're looking at poverty, looking at income, but income can like catch you off guard, because if you're investing in a college town, the people that are taking these surveys that are in college have, they're obviously like under the poverty line. And so that like throws off your demographics. So I was really interested because both you and Julia are Naval Academy grads, but you guys both are invested in multifamily deals. So I'm wondering, is there like a salary, or is it like a higher than normal stipend that you get in the academy?
Yes, while you're at the academy, you get something called midshipman pay or cadet pay.
Oh,
And it's uh it's about 35% of an O1 salary per month, but the academy cuts you off based on your year group. So when I was at the academy as a freshman or fourth class midshipman, I made $100 a month. As a sophomore or third class, I made $200 a month. As a third class, or a second class or junior, I made $300 a month. And then as a first class, you make up to $1,000 a month, because that's when they start actually giving you the remainder of your pay. And at points you have certain periods called held pay. But without getting into the intricacies, yes, there is a stipend, and yes, you make money, but it's minuscule.
it is minuscule. Okay. How are you? Again, like numbers aren't important. Just in general, how are you able to finance getting into your first multifamily deal?
Yeah, absolutely. So that first deal, like I mentioned in Avon, was a joint venture. So what Nick and I had focused on, along with another general partner of ours, or another partner, excuse me, of ours, is that we really brought the opportunity. So we had sourced the opportunity from a broker we had built a relationship with in the market. We had underwritten the deal, tried to obtain financing, started that process, and really brought all the stones to alignment before seeking out potentially other partners who may be interested. And so we brought about, between Nick, myself, and our other partner, we bought about 10% of the capital. And then we found two other larger partners who wanted a active role and who wanted to learn more about multifamily investing and wanted to get into their second or third investment. And they brought about 90% of the capital stack. So for us, it was really about, doing the due diligence and making sure that the asset itself was secure enough to be able to bring on other partners and trust us with their money, essentially. And so that project has been going really well. Renovations are underway, and we're looking to turn over the units here pretty soon. But
where do you see yourself moving after? Because it sounds like you're about to close on the park, maybe the next quarter or so, sometime this quarter.
Yeah, absolutely. We're closing on the park actually a week from tomorrow.
Okay.
The closing has been delayed a few times just due to just shout out to all your listeners out there. If you ever try to get Fannie or Freddie debt, just know that there's a lot of requirements that go with it, and you need to have signatories who have experience, especially in this market. Luckily, we do, and so we're building our track record that way. But there are a lot of requirements that go into it that people don't really talk about, on the high level. So if you have any questions, feel free to reach out. But that's what we've been dealing with for the past few weeks, just in terms of insurance requirements, lending and reserve requirements, things like that. But great process to learn, and very excited to close on those.
Yeah, for sure. Actually, I should probably obviously I'll put like your contact info in the description, but I watched a set. It was like a multifamily university thing, but it wasn't him talking. It was like another lender. He just went over the like lending picture for 2021 and like Fannie Freddie loans that are non-recourse, lots and lots of stipulations. And yeah, one of them is like you need to have experience, and it's like, oh, like I've LP'd in a deal, like that doesn't count. And if you're trying to do like a 30 unit deal, if you've done like a 5 or a 15, that doesn't count. It's like you basically need to have done it before in order to do it. And so you can do it before by bringing on somebody who's actually done it before as a partner.
Absolutely.
The way around it. Where do you see yourself moving post closing the mobile home park? Are you going to stay like in that niche? It sounds like a super interesting niche. I don't know anybody else is doing it. Especially like I do see a lot of people that are doing multifamily. I don't know if it's becoming saturated, but it's where do you see yourself moving in the future?
Yeah, absolutely. So we take a pretty unique approach, I like to say, in what we look at, Michael. I mean, we're still open to multifamily. We're very bullish on both asset classes. We do prefer mobile home parks as of now, just because there's less competition in the space. It's a quote unquote less sexy investment for because they don't really know how to start. So, we found some great operators in the space that we really enjoy working with. Both of them happen to be veterans down here in the Gulf, and we just continue to add value to them by bringing them deals focused in that multifamily or mobile home park space. But moving forward, we actually have a couple other projects we're working on, and we're actually under contract on right now, which are multifamily focused with a corporate housing spinoff. So those will be a pretty interesting take. And so we're working on some of those assets as well. So the deal pipeline is flowing, and we're going to continue to work on assets that meet our investors' wants and needs as best we can.
That's sick, man. Congrats. Last question is, what is your superpower?
That's a good question. I wouldn't say I have a superpower by any means, because I'm not superhuman. But if I had to say something that I may be good at is, being able to potentially try to find the answer for someone in case even if I don't have it. I'd like to say that I'm able to connect individuals as best as possible just through networking. And, let's say, you ask me, hey, who's a good mortgage broker in Texas? I'll say, hey, I don't know of one, but hey, I can ask, a contact, and I can make an introduction for you. So, I'd like to say that I'm good at, potentially connecting other people and, helping out as best I can. But also, explaining what these are, opportunities look like for investing. A lot of people aren't familiar with how these investments are structured, what the investment criteria are, how they may help your portfolio grow and diversify. So, both angles, right? Connecting people with people and explaining this business to others. That's what I would say I'm good at. But again, I'm by no means a superhuman.
Yeah, it's superhuman, but super resourceful.
Thank you. I appreciate that.
No problem. I appreciate you, Hersh. And yeah, thanks for joining on. And then I'll leave your description, I'll leave your contact information in the description. And yeah, man, talk to you soon.
Yeah, absolutely. Thanks, Michael. Thanks for having me on.